Welcome to the CoWoCo Company Water Cooler. So we in here in the building today, and I also want you to remember to like, subscribe, comment, and share. All right, and I know that we are not financial advisors for educational purposes only. All right, so first we're gonna start off with talking about index and ETFs, index funds and ETFs. Chris,
Yes, sir. Yes, sir. Yes,
got to
sir.
say,
It is I. It is I. Ladies and gentlemen, thank you. This is the company water cooler. That is the Sensei Leroy. I am Chris. We appreciate you for joining us. So we'll start today with exchange traded funds. Okay, that's ETFs and index funds. Now they have a lot of similarities to two. The major difference between ETFs and index funds is that ETFs can be traded like individual stocks. So take, for example, the S&P 500 ETF, right? SPY. It has it tracks the index of the Standard and Poor's. You can trade this just like you trade Tesla, Apple, Microsoft during the day because you treat it like an individual stock because it's tracking the S&P. Index funds, you cannot track. They can only be bought at the end of the day. So the end of the trading day, you don't trade index funds throughout the day like you could an ETF because it's not treated as an individual stock like an ETF is. Both of these investments, ETFs and index funds, are passive trading tools. You do have some actively managed ETFs. So these are going to be, and these are usually, so a lot of hedge funds, right? These are, institutions with a lot of money. They have to make their money back for their investors every 6 months, every year. So they have to look for those companies that are going to get them that return. Most of them are trying to beat the market. What an ETF does and what an index fund does is it tries to match and or slightly beat. The goal of an ETF or an index fund is not to beat the market. The whole point is for you to passively invest in these avenues so your money can grow over the long term, which is one of the many benefits of investing in an index or an ETF. One is not better than the other, and you'll probably get similar returns. So I know, Leroy, that you mentioned a popular BUG ETF. That's the cybersecurity ETF, I think. I think that's what it was.
Oh yeah,
BUG.
yeah,
Yeah,
BUG,
yeah. So BUG is an ETF. So you can buy BUG at the opening of the market, and you can trade it all day, all throughout the day, until the market closes at 4:30 Eastern Standard, right? That tracks cybersecurity companies. You've got some major companies in there that are good companies that will over, whatever the that should over the term of your investment make you back. It should make you good returns.
Right.
But the whole point of both is so that you can park your money somewhere, and you're looking for that slow nickel, right? In the words of the great E40, you're looking for that slow nickel, right? You don't want that fast dollar. So if inflation, let's just go back to the regular inflation, 2-3% a year. If inflation is 3% that year, and this ETF over the past, let's say 10 years, has garnered an average return of 8% a year, it's a good ETF to invest in because you're beating inflation by 3%. Right now, the market that year could do 10%, but the goal, like I said, of an ETF and an index fund is not to beat the market, right? It's to match it. So if the market does 10%, ETF probably do 10%, the index probably do 10%. But when you're investing, you just want to beat the natural cost rise of things through your investment. But that's the one major difference between ETFs. There's a lot of detail in ETFs and index funds because you have futures tradings in there, you have commodities, but that's a more sophisticated level of investing in those indexes and those ETFs. But the major difference to know between ETFs and index funds is you can trade ETFs throughout the day, just like individual stocks.
That's right. That's right. And also, just think about this too. When you think about index funds or ETFs, think about how when he mentioned like you have different companies that's actually, let's say like the ETF, like you have different companies that's actually in there. And basically the companies that they have in these ETFs, they try to actually match their particular, I would say, name or like topic or like, so like when he mentioned BUG, like bees and Bob, UG, it spells out bug, right? So what it actually spelling out bug, when you think about a bug, you think about how a virus or something can infect, basically like some type of software or, like get into the network. So in this ETF of bug, you have basically other companies inside of there that actually stops this virus or stops, like getting the network infected. And so they tried to build basically the particular stocks basically in there to represent that name of that particular ETF.
Right. It's like a basket of companies and that's the analogy that a lot of people use. It's a basket of companies in that said industry or in that said swath of companies, right? So if you had an ETF that was based in, so you take the consumer discretionary ETF, this is going to be spending from people. This is discretionary spending, right? I don't want to say excessive, but this is spending that people have that it's sort of like at their disposal, right? So these are going to be popular companies that people put their money in with the extra cash that they have left over, right? The opposite of that is a consumer staple. These are companies that people rely on. You'll need these. So this is going to be where most people put their money immediately, right? So if you have a company, a technology ETF, and let's say that ETF, that fund has 70 companies in it. All 70 of those companies are going to have something to do with technology, right? Same thing with finance, same thing with industrials and materials. If there is, so the finance ETF, you're going to have a bunch of banks in there. And then you're also going to have some fintech companies in there. And you're also going to have companies in there that program for fintech, companies in there that program for banks. You're going to have funds in there that have to do with finance. You may have some financial, everything to do with finance. That one basket, that ETF is there. ETFs can track index funds, or indexes, right? So if this whole index is this is the technology index. Well, that's going to be the entire technology index because it's the index of technology. How many ever ETFs are available, you pick one, right? And that's going to follow that, pull from that index 30, 40, 50 companies, invest in those, and then you can invest in the ETF that's following the index, right? And they work interchangeably, the ETFs and the index. So in my research, I was finding it difficult to make a distinction between, okay, here's index, here's ETF. But what I found is they operate the same, low cost. You don't have to worry about a huge expense ratio for both of them, particularly with a good ETF or a good index. But an index is this segment of the market here. An ETF pulls from that segment what it wants, and then you, the retail investor or the private investor, can invest in that ETF that picked from the index what it wants. So that's how I'm making sense of it. But you can also invest in that index, right? You can invest in the entire stock market if you want, over 5,000 companies or something like that. And every year That's going, and that's going to be okay. Well, we're going to see where the entire market goes at the end of the year. Or you can pull from that technology ETFs, finance ETFs, energy ETFs. So, all 11 sectors of the market, and put your money behind those ETFs and pick from those which companies they want to invest in because they've done the research, they've compiled it and put it in a thing, set it and forget it. But it's important to know that most ETFs, because you do have a few actively traded ETFs, like human staff there. Okay, let's sell this many off of this and buy this. But most exchange traded funds, ETFs, and most indexes, I know, but most ETFs are passive. So this is the long-term investment that you want to make.
All right, so next we're going to talk about how basically society actually have an effect on the stock market. So Chris,
yeah,
what you got to say?
Yes, sir. So because I mentioned this before, it's important that when you're investing, you pay attention to what's going on in the world. I mean, do that anyway. But events that happen in a society are going to dictate where the money moves, right? It's going to dictate where the market goes. One very good example that I'm thinking of is Juneteenth. So Juneteenth just got recognized as a federal holiday, right? So people will have that day off. Well, what does that mean for not only Black-owned companies, but what does that mean for companies promoting products with Black people in it, or Black people's faces on it, or their likeness or characteristics? What does that mean, right? So, I mean, we saw what happened with Walmart. That wasn't that good for Walmart, but that affected them, right? Walmart released a Juneteenth flavored ice cream that a Black-owned company already had, the same flavor and everything, and received a lot of backlash for it, right? What does that mean for Walmart stock? So, because Juneteenth is coming up, you might see a rise in funds added into Black companies on the stock market, Black publicly traded, and it's only 5, right? You've got, I know for sure that there's a media company there. TV1 is under that umbrella. It's out of Maryland, but I should know this, but there are 5 that I'm aware of that are Black-run, publicly traded companies on the stock market, the New York Stock Exchange. So I suspect because Juneteenth is right around the corner, you're going to see some money go into these companies. You're going to see people investing in these companies, taking the stock price up, making some people some money. And then after Juneteenth, people are going to pull the money out, right? So obviously you want to pay attention to federal regulations and money coming from the federal government, but pay attention to various events taking place in society, right, that make national news, because that's going to affect how products are moved. That's going to affect what people buy. So if there is a salmonella outbreak in the chicken breast from, whatever publicly traded company, people are probably not going to buy that. That's going to hurt profit. That's going to hurt the stock. So be mindful of the different societal events that take place. If strawberries become bad to eat, this year's crop for strawberries is bad, you can expect companies that heavily invest in farming to take a hit in the stock market because we can no longer eat strawberries. Just pay attention to the news and the different societal event, the flashpoints, these flashpoint events that happen. Juneteenth is a holiday. Okay, great. What does that mean? Let's put money behind Black companies that are traded on the public market. Boom, and then let's move on. But I only counted 5, Leroy, for Black-owned publicly traded companies. Are you finding anything more?
I'm trying to look now and actually see.
Okay. It was because it's a media company, and it's out of Maryland. TV1 is under the umbrella, and
Oh yeah,
Bounce is
TV
under the
one. I
umbrella.
remember. Yeah.
Yeah. And it could just be TV1 that it is that, I don't, because I think the ticker symbol is TV1, TVONE. I think so. But yeah, pay attention to societal events when you're investing, because if there is work, and that doesn't mean that the company is bad. What I'm saying is societal events is going to, in the short term, affect a stock performance. So if there is news that a Tesla battery caught on fire, nobody was hurt, everybody was okay, Tesla might take a hit. It might take a drop that day because people feel unsafe driving Teslas. But when something else happens, unrelated, or other news comes out, Tesla stock will slowly go back up, because that's another societal event that you have to pay attention to. So it's sort of like your head is on a swivel. You're moving your head back and forth between, oh, okay, that just happened here. Okay, boom. That just happened here. Okay, boom. That just happened here. So you're keeping your head moving around, but think of it like, if you receive news in your family, good or bad, you react pretty quickly to that news, right? Grandma fell and broke her leg. Let's get her to the hospital. Let's go there right now. We're investing our time in that. She's there, good. They got the cast on her. Okay, boom. We just got another call that a cousin, so you know what I mean? And so we can go and pay attention to that now. Grams can heal and get better and walk again in 6 months. Off the cast.
Okay, now it's Urban One. That's the name of it.
Urban One. That's what it is. Okay.
Yeah, Urban One.
Yeah.
Also, another one is RLJ Login Trust. There's another one.
Oh, I think that's a REIT. That's a real estate investment trust, right? I think so. Yeah. The lodging company. Yeah. Because it's a hospitality. I think that's a
real estate.
That's a
right.
REIT.
Yep, it is. Yep. Then you have also two Ping Identity Holding.
Okay.
You have that one, and then you also have a Global Blood. This is therapeutical.
Oh, okay. Cool.
Harvest.
I didn't know they had Harvest.
Carver. I'm sorry. Carver Vancouver. Cooper.
Yeah.
This is the BANCORP.
Oh, Bancorp.
Okay. Yep. You got that
one.
one.
Yeah. Carver. That's right.
So yeah.
And there's another. And now, okay, so Walgreens has a Black CEO. She's been the CEO now for a few years. It's not a Black-owned company, right? Or it's not a Black publicly traded company. It just has a Black CEO. It's a difference. And Lowe's with Mark Ellis. He's the CEO, Black guy. Also, not a Black company, just a Black CEO. So it's a different show. So these companies, the companies that Leroy just listed out, these are Black companies. Like, these are Black-owned companies that are traded publicly, that you can buy. You can go to whatever your brokerage app is, and you can purchase shares in these companies. So, I mean, over the next week or two, I suspect these companies will see an increase. Definitely the volume.
They also have another one called American Shared Hospital Services.
American Shared, cool.
So that's another one.
Okay.
So you got a couple that's actually on here. Broadway Financial Corp. Got that one. And Axum Therapeutical.
Okay. So it's been a few added. All right.
Yeah. So,
okay. Because Urban One I know, Carver I know, and RJI or RJL Lodging I know. I know those three for sure. But because the last I checked, it was 5, but it's like, it's becoming more. It's becoming more popular. Fantastic.
Matter of fact, there's an ETF that also deals with it's actually a black lady that actually owns the institution.
She's a doctor, right? Is she a doctor?
I don't know for
Or that
sure,
might
but I
be a
know
different.
she
Okay.
owns one of the what you call them I'm saying institution, but what's the other name?
Oh, the hedge fund.
Hedge fund. She actually
Yes,
owns a
yes,
hedge
yes.
fund, and they actually have companies inside of their particular ETF that they actually have are
Yeah.
like activist type companies that's actually inside of that
Yes,
ETF.
yes.
I
Yeah,
I
she
don't
is
know
a
her name
doctor.
for
It's the ES, because they call it social, what do they call it? ESTG, environmentally say the ESTG companies. Yes, yes, yes. But these are the companies that actively seek out companies that don't invest in, like increasing the carbon footprint and their, alternative energy sources. And I think it might be a few like cannabis stocks in there. But yes, yeah, the ESTG. Yeah,
Okay,
I
yeah.
keep wanting to say ESG, but that's a rapper. The ESTG, right? I keep wanting to take the T out, but I gotta put the T in there. Yes, okay.
Man,
Uh,
that is
ESTG company,
funny.
yeah,
Yeah.
yeah,
So all right. So yeah. So
yeah.
yeah. Just make sure, like you said, pay attention to what goes on in society because it does affect the
Mm-hmm.
stock market.
100%.
Also too. So
And these events are temporary, so I just want to make that I want to make that
oh
a
yeah.
note. Only if, I mean, now listen, if you have a major catastrophic event that continues to require money and pool resources, then yes, that might be a long-term negative thing. But most societal events affect the company for a couple weeks, maybe a few weeks, and then things get back on track, right? So we're paying attention to it now. It's hot. It's in the news. When that goes away and something else is introduced, then we can get back to business as usual. Nothing to sneeze at, like it's nothing to not pay attention to, particularly if you work at those companies. But it's oftentimes it's oftentimes a temporary happenstance that affects the stock.
So all right, we're gonna get into our favorites here. Stock picks.
Yes, sir. Yes, sir. The favorites. So my favorite so I'm gonna have two. I'm going to say, because I'll leave tomorrow for you. I'm gonna have two. Nike and XLI, of course. Y'all know this. XLI is my favorite ETF. That's the industrials ETF that Caterpillar, John Deere, all of these great companies are in there. So, and the growth is steady. I like XLI because the growth is steady. But Nike has performed amazingly over the past few weeks. Share price is up back to what it was almost, I think, a year and change ago. It was at 142 sometime last year, approaching 120 now, up from 108 just a couple weeks ago, not even. But Nike is a great company, brilliant investment. It's one of a handful of companies that has extremely strong brand recognition. You know a Nike swoosh when you see one. And what they're doing in the future with what they're doing with their investments in technology is amazing. So Nike and XLI for me this week.
All right, so off jump, I'm about to say Amazon.
Of course.
Because tomorrow, June the 6th.
The 6th of June, yes, sir.
Yeah, they should be doing a stock split on tomorrow. And so definitely Amazon is basically going to be in there. Jump in there into the Amazon.
Jump in there. Get in there, really. Yeah.
Oh, yeah. So And then also I'm gonna say FedEx. You know, he UPS guy on FedEx.
Yeah, you know, I'm a brown guy. Yeah. You know, what can we do for you? You know what I mean? See, we asked the question, right? We asked the question. I don't know what question FedEx has, but we asked the question. You know what I mean? What can we do for you? Right? How can we be of assistance? Yeah.
Matter of fact, FedEx, when he just mentioned that Walgreens actually have a black woman as a CEO, FedEx actually has a linking with Walgreens where people can actually drop their FedEx packages off at Walgreens. I just want to throw that in there.
Of course. I mean, hey, listen, of course, the big purple, of course.
And also too, I'm gonna go with Lockheed Martin again, because basically all this stuff is actually going on right now with like the war. It'd be a good stock to actually get into. It goes back to what he was mentioning just a minute ago about society, what's going on in society, you know. So even though it's like something like, you don't expect the war to go on like for forever, but you know,
right,
just for like the period that is actually going on, the amount of money that's actually being spent, you know, to be able to actually make the weapons, you know. So
yeah.
But those are my three, basically.
Yeah.
Amazon, FedEx, Lockheed Martin.
Yes, sir. Yes, sir.
All right, you all.
I think that's it, man.
Yeah.
Yes, sir.
So remember,
we out of here.
Like, subscribe, comment, and share. Peace.
See y'all on the next one.